Hello and welcome to CMS Forex News. I'm your market analyst, Nick Nassad. Today is Tuesday, January 20th, 2009. The pound-dollar pair stumbled for a second straight day, though today's fall was more critical as the pound plunged more than 500 pips, breaking through support at the 1.45 level to reach a low near 1.3860. That's the first time the pair has gone below 1.40 since 2001. The pound is being pressured as the UK rolls out a second bailout package for its beleaguered banking sector. The pound yen extended its slide from yesterday, falling nearly 1,100 pips from yesterday's high near 136 to reach a new record low around the 125 level. The pair broke through support at 1.29 as risk aversion heavily favored the yen and dollar today. The euro dollar was down today as investors looked for safe haven in the greenback. The pair slid below a key upward sloping line of support at the 1.31 level and fell to 1.2880. That caps about an 1,800 pip slide in the currency pair since it peaked above 1.46 in the middle of December. There were no key releases from the US today, though the country did tune in to see the inauguration of Barack Obama as the country's 44th president. Stocks in the US were lower today, following yesterday's national holiday. Major indexes were down 3% as of 3 p.m., which pressured the dollar-yen pair after it had climbed overnight to the 91 level. From there, it slid about 100 pips, breaking support at 90.20. In a look at some European fundamentals that came out overnight, UK consumer prices eased at a slower pace than expected. Annual prices grew 3.1% in December compared to the 4.1% seen in November. Expectations, however, called for a drop to 2.6%. Core prices did see a substantial easing, so the data should not impact the thoughts of the Bank of England as it prepares to keep cutting rates amid its deepening recession and financial market turmoil. In Germany, the ZEW measure of economic sentiment showed a better than expected improvement for the January period. The indicator rose by 14.2 points and now stands at -31. The improvement is attributed to a second stimulus package from the German government and expectations that the ECB's policy of lowering rates should stabilize the economy. The Eurozone as a whole also saw a better than expected result, rising to -30.8. In Canada, manufacturing sales decreased for a fourth consecutive month in November, dropping 6.4%. That was the lowest level since December 2004, and shows the strains being put on the slowing Canadian economy. The Bank of Canada, sensing the outlook for the economy has deteriorated since its December meeting, where it lowered rates by 75 basis points, cut rates by another 50 basis points today. That brings the base interest rate to 1%. The US dollar-Canadian dollar pair rose above 1.26 today and briefly breached its high from last Thursday. The pair remains in its upward channel started on January 9th, with major resistance coming up at the 1.30 level. Yesterday evening, we also saw data come out on New Zealand's consumer prices for the fourth quarter. The release showed prices easing at a faster pace than expected, with prices down 0.5%. The New Zealand consumer price data, along with a sense of risk aversion in the markets, weakened the Kiwi against the greenback. The pair extended its fall from yesterday, amounting to about a 350 pip swing in the last two sessions. We now run up against support from last November, early December. Tonight, New Zealand posts data on retail sales, and Australia releases its measure of consumer sentiment. Overnight, Germany reveals its producer prices, while the UK posts data on employment, including its claimant count. Tomorrow, Canada reveals its wholesale sales, and the US posts a measure of the housing market. And that wraps up today's action in the Forex markets. Thanks for joining us here at CMSFX.com, and happy trading.